This is the Flexible Office Economy, and I'm Mark Gilbreath. This week, I'm thrilled to be speaking with the real estate leadership team from ServiceNow, one of the fastest growing enterprises in Silicon Valley. My guests today are Robert Teed, Vice President of Real Estate and Workplace, and his colleague Daaf, Director of Global Real Estate and Workplace Services. Welcome, Robert and Daaf, and thank you for joining us today on the Flexible Office Economy.
Thank you for having us.
Yes, thank you.
Robert, you've had a notable real estate career with leadership positions at a series of Silicon Valley high flyers, ADP, Symantec, Polycom, DocuSign, and now ServiceNow. It would seem that the Silicon Valley hypergrowth tech bug has truly bitten you. Are you a lifer?
I am a lifer, yes, sir. I quite enjoy the space and can't see myself doing anything else.
And does ServiceNow stand out in any way with regards to just the velocity of its growth? I mean, it seems like it's had a remarkable trajectory here over recent years. Is it par for the course in Silicon Valley, or is there something special happening at the firm?
Yeah, I think it's a great question. It is special. Growing 35%, 36% a year is not unique in the Valley, but doing it at scale like we're doing is relatively unique. And also doing that in a way that doesn't disrupt the culture and some of the secret sauce that makes ServiceNow special. That's always been one of the things that really attracts me to ServiceNow, that we're able to do that and able to do that very consciously, where some of our brethren and peers have gone through that same kind of growth, but they kind of lose their way, or they lose their culture, or they become something else on the other end. We've been able to really maintain kind of who we are, which I think is pretty darn special in the Valley.
Daaf, you joined ServiceNow, I think, a couple of years before Robert did. I think 5 years ago, if I'm not mistaken. And I think the company was about 1,000 employees and 300,000 square feet of facility at that time. Take us back 5 years ago. How would you characterize the company's flexible office strategy and footprint at that time?
Yeah, 6 years ago, we used service offices to expand within a new market. Right, so we had a couple of our fixed sites, which we still have today, and then on top, so every single new entity that we would open, with a few people in, we would open up a service office. Typically, would start at a Regis. Back in the day, we had our general MSA with them, and we continued to expand to get all their benefits. So that's kind of what we stuck with pretty much for a number of years. And we continue to expand that portfolio with them.
And at that time, circa 6 years ago, 5-6 years ago, it's a familiar strategy I heard you just articulate. Enter new markets with Regis or peers of theirs. At what point, again, circa strategy 5-6 years ago, at what point would you step out of service office in that generation of your portfolio strategy? I was going to say, under what sort of conditions would you consider that you had outgrown service office at that past stage?
Yeah, I did a little bit of research kind of back then. It's like, what is the turnover point? Right? When do you tip over to something that is called flex or a fixed office? So we figured, like, with a number of locations, we did an analysis based on some financials, and we came up to 25, 30. That was the number. Not necessarily set for every single market, right? Because there were some regional differences. Whereas I could imagine that the more kind of the more expensive markets like a Switzerland, Zurich, for example, I think that tipping point was a little bit higher. But other than that, 25, 30, that would probably be the right back in the day.
And since then, over the intervening 6 years, the company's grown to, I believe, over 8,000 employees. I think the data I read was your portfolio now is in excess of 1.4 million square feet. Stock is up 400+%, kudos. And you've got now locations that I think in 75 or more locations. Is flexible office or workplace as a strategy a more prominent part of the facilities sort of go-to-market and placemaking strategy today?
Yes, for sure. As we kind of continue to grow and to continue to scale, we see there's a huge need for a lot more of the flexible office solutions. We have been experimenting for sure the last 2 years, 3 years, trying to find the ideal solution, the ideal partner to do this with in different markets, right? So we didn't only focus on the US, we did go go out to where we had the opportunity in Asia, but also in EMEA.
And so, Daaf or Robert, when you say experimenting, that often implies you're testing something new or different. So is that you responding to different solution offerings in the market, or is that you trying to solve a problem that you have in some different way? Like, sketch this out for us. What area of experimentation?
And this is Robert. I'll answer that at kind of high level, and then Daaf can give us, more of the details. But sort of what we've been trying to explore and experiment with is really, and you hit it on the head when you talked about the 6 year ago scenario, Mark. We had two sort of product offerings that we could give the company when it sort of related to workplace or workspace. There was either, the serviced office product or the fixed office product. And as we've grown, and actually we're now in 84 countries, if you can believe that, and our portfolio is just south of 2 million feet. So it's changed even since you and I and Daaf last spoke pretty dramatically. So what we've tried to identify is that, that's a very binary set of solutions. It's either serviced office or fixed office. Mm-hmm. And what we've tried to do is fill in the middle part. And that's where we've been experimenting so much to say, well, it can't possibly be the answer that once we get to 25 people in a market that we know the answer for the next 10, 15 years. There's got to be an incremental sort of step in there somewhere that we can find. And so that's the experimenting that we've been doing, is trying to find a product that sort of fits between the small and the big. And Daaf's done a really good job of sort of poking at the market, and we together have poked at a lot of the big providers that sort of say they're in that space to figure out, okay, well, is there a product in there that's really commercially viable? How do we leverage it? How big can it possibly be? How flexible can it possibly be? So that's kind of why we've entered in and why we started to experiment, is really that those bookends were no longer working for us. We had to find something kind of what we call a middle product, which isn't what the market calls it, but that's what Daaf and I call it internally.
And what are the attributes of the ideal middle sort of hybrid product?
Yeah, I think, and again, I'll stay high level on this. We often don't know what our growth trajectory looks like in a given market. And I think that's probably true of many of our brethren. So if you go in, as Daaf said, when you hit 25 people, now you move into fixed office. If we don't know that we're going to be 100 people or 1,000 people in a market, we certainly don't, we have that duration risk that many, CREs talk about. And we don't want to buy, 1,000 people worth of space for 15 years if we only need 100, and vice versa. And so it's really a lot around flexibility. That was probably for us, the original driver was how do we find a way to sort of grow in these markets? And a lot of the markets we're in, the landlord community just doesn't have product solutions for us. And many of the service providers don't have product solutions for us that allow for that flexibility. The old days of take space, sublease it, take more space, just those days in many of the markets that we're growing in doesn't work. And so the attributes were initially that flexibility. Over time, though, frankly, it's become much more about employee experience and how can we get a consistent culture in our different product offerings, whether it's fixed office, corporate campus, super small serviced office. How do we get the right employee experience level at it across the product suite? And that's been a shift, Daaf and I have probably made in the last, I'd say 18 to 24 months, where we've moved not completely away from flexibility. That's certainly one of the key drivers, but it's also been much more about employee experience.
So just to put a fine point on that flexibility element. And so we're sketching out the scenario of it's a team somewhere north of 25 people to some upper limit. Mm-hmm. Limit might look like. But on the flexibility piece, what is your current point of view on an ideal term? If the traditional lease is 7, 10, 15 years, and if the serviced office gives you the option of month to month, for that hybrid play, Daaf, what's the benchmark that you'd like the market to sort of normalize around in terms of term length? Is it years?
If we talk about Utopia, right, you would have a 12-month term, and then that's probably the basis of where it's going to be feasible for an investor or for a provider to actually put in some work to get it up to spec, right? To get the good look and feel for employees to make it look great as well. And then ideally, like if we would be able to expand when and as we need within the 12 months or after the 12 months, and then continue to extend. But if I look at kind of what's happening in the market space today, you won't get a 12-month deal in the market space. It's a 24, 36-month kind of deal. And if you're lucky, or if you're not lucky, let's put it that way, that can go up to 4 years, which is close to a fixed term anyway.
Yeah. If I could just say that, there's an analogy here with cloud computing and workspace as a service, that this middle market that we're talking about, which is, sort of when public clouds first started to emerge, you went through a lot of the same challenges. How do you buy it? How do you provision it? How long? What are the commitments? And I think we're kind of in the same place as it relates to workplace as a service. We're in very sort of early stages of it. But if you look at where cloud computing is today, you can literally buy computing by the second, and you can buy burst, so you've got this massive capacity flexibility in the marketplace as it relates to cloud computing. Ultimately, I think what the utopia that Daaf talked about would be something similar to that. There'd be a level of commitment around it. Maybe it's a 12-month commitment, but with lots of flexibility on capacity, consumption, et cetera, much more liquid than it is today, if you will.
And just for clarity purposes for our audience that may be new to this notion of there being something in between serviced office and fixed office, give us some examples of providers or entities that you guys are either working with or have looked at, so that they can sort of differentiate. If they know the world of Regus and WeWork and others, what are the options out there in this realm of hybrid or middle?
Yeah, I mean, there's certainly a lot of folks that are trying to figure the market out and have delivered great products. Mark, I'd say Liquid Space, your company is certainly one that's helped us a bunch in that area. We've done some work with Industrious as well. They're really good middle market player, or middle. I don't want to call them middle market. That's the wrong term, but middle player in our parlance. Middle solution. And then I would say that WeWork is really trying to come up the value chain with some of their enterprise products as well. And so I think a lot of people are out, and even some landlords, frankly, are trying to figure this out. And so I think we're seeing a lot of dabbling and a lot of new players trying to leave the co-working serviced office arena and work their way up sort of the value chain all the way up to the big stuff, right? And I think you're hearing you're hearing a lot of chatter about this enterprise opportunity for companies like ours, where your entire portfolio could be run in this flexible middle product kind of a thing, which I think that's truly utopia at this point. But you're hearing a lot of chatter around that. And again, I think there's a lot of analogies there with cloud computing, because it took a very similar journey.
And I think kind of that's kind of a lot of that is on the US side of the fence, or on the definitely on the other side of the pond. And if you look at kind of from an EMEA standpoint, I think Instant Offices has been doing a lot of work. We actually worked with them on a specific deal for us. The only thing that still surprises me, and maybe it does not totally surprise, is Asia, because I have not seen as much of this in Asia right now, and that's probably due to the shorter lease terms. That's what I can imagine.
Your appetite for a hybrid or middle solution any less in Asia than in
No.
In fact, you could argue some parts of the company it's actually greater, because we have this sort of explosive growth, and we would probably use as an example Tokyo, or we're in a couple markets in Japan, but Tokyo comes to mind, where we caught it at this great time, and the market just doesn't have a solution for us. And so Tokyo is one where if there was this real flexible or more flexible product that we're talking about, that we would definitely gravitate towards that. And it's simply speed and quality, and that's been a challenge for us in a relatively traditional market. In the serviced office, product there just doesn't solve our needs. It's just, there's just not enough of it, or it's just not big enough, or it just doesn't meet all of our criteria. And we're talking, you know, hundreds of people in Tokyo, not just 25. This is a much bigger problem for us. And Daaf and I kind of found ourselves, you know, having to really get creative in that market to try to meet the demand of the company, and not put them in 50 different locations around the city.
Well, and also from a financial standpoint, right? Tokyo is one of the most expensive markets in the world, right? Also trying to stay within some boundaries.
Mm-hmm.
I spent 2 years working in Tokyo. It's a world of its own. Yep.
So can I just bring up another one that I think is interesting, as we are looking at a Germany right now, which is geographically very challenging, and we have a couple of these locations. And when I talk with the business, we're like, we have a fixed office there today, and why? And so the question is because of utilization, and people are so widespread, and I think the US has similar challenges. Why can we not just go fully flex, right? So we're definitely looking at a scenario now in Germany where we don't do any of this fixed work because there's enough providers in the market that can help us with it. But also to go kind of to build as we continue to scale and add a lot more people. It's so much more, it's much more easier to kind of to continue to scale at the pace that we go.
One utopian notion is of future workplaces, the idea of enabling every employee with flexibility and choice.
Yep, absolutely.
The notion that they can choose the environment that best matches the task at hand and their unique work style or temperament. How comfortable are you with that utopian point of view of giving choice to the individual ServiceNow employee? Does that fit? Are there risks to that?
There's risks. So, and I can think back, if anybody that's in CRE would remember Bill Agnello from Sun, this was his vision, you know, in the late 90s, early 2000s, and we're just now trying to get close to even delivering anything like what Bill talked about way back then. But I think the risk, we talk about this a lot, is it's easy to do what you just said from a space view and provide all that choice to the employees. What we start to think about now is, are we outsourcing our culture as a result? And how do we sort of, because there is a magic that happens when you have clusters of folks together in the same company working on the same projects and products. And when you get too diversified, you do start to outsource your culture a little bit. So how do you deal with that and the synergies that come with that? So that's how we think about it a lot now. If we could somehow magically solve that part and have that that utopian scenario that you described, Mark, both in hand, I think that would be actually where the market, the workplace market would go.
Well, and just let's not forget the legislation point of view in different countries like a Germany, like a France, right, where we are bound and tied to a lot of rules and regulations that will definitely not help us in that journey.
Lingering on this topic of culture, it's an interesting one. You know, let's imagine for a moment, again, put our utopian hats on. If I could, or if I did choose to provide my employees that option of choice, the culture, and looping back to the culture question, out in the market today, it seems to me you've got sort of passive culture and active culture interests. If I just let the ServiceNow employees head out into the field with an app and the ability to book space by the hour, by the day, I suppose they might, to some degree, be influenced by the culture of the environments that they happen into. Mm-hmm. There are also operators in the co-working world who are very outspoken and forward with their desire in their advocacy that their environment is a culture in and of itself. Mm-hmm. How do you feel about that? Those active promoted cultures, does that give you pause when you consider supply partners? Certainly, the idea of a culture within a co-working space is one of the things that set it apart for a time from the serviced office options that preceded it.
Yeah, and I think there you would dip, and I know exactly what you're talking about there, and those that are sort of preaching that. I think there's a difference between culture and employee engagement, and I think you can, in some of those environments that you're speaking of, and some of those providers, they can drive a high level of engagement, and they can create, you know, an amenity-rich environment in an environment that people want to be in. I would view that today as more of a third place scenario where, you know, the culture is a bunch of companies together, sort of creating the culture of that particular place, if you will. At ServiceNow, we would not want to put the entirety of our culture in somebody else's hands.
Right.
I think that is an area that we really do focus on a lot. And there's also, frankly, there's privacy concerns with IP, et cetera, that we have to think about. But frankly, the culture topic probably sits on top of all of that for us.
So they would effectively kind of enhance the experience, but the culture will be built within kind of the local community, the local managers and leaders of that specific country to build the culture. Yeah. So it will be an add-on.
Characteristic then of your utopian hybrid or middle sort of solution, that it is an environment that is uniquely ServiceNow? Is it a team space with your name on the door that only ServiceNow employees are in?
That's certainly how we think about it. I mean, that's where our heads are today, and probably for the next few years, is that it's space that we control, or mostly control, that's highly flexible. And this is where there may not be a market match on this, is we want all the control and flexibility on it, and we want the privacy, and we want, you know, the brand opportunity, et cetera, that we want to own the employee experience. Yet we want a high level of flexibility in what's available to us and how we consume it, et cetera. And so I think, again, I keep going back to cloud computing, you don't know if you're on AWS or Azure or whatever you're on, if you're using XYZ's, you know, product. I think there's a way to do that in the workplace products as well, where you don't know what's behind it. You only know what you see, you know, what your user interface is. And I think there's a way to do that. And I wish I knew the answer, because I would go invest in it right away, but I do think there's a way to do that. And I think the market is experimenting enough where we might actually get there.
I agree. Daaf, Robert touched on speed, and certainly one of the value propositions that many of the operators sort of boldly claim is, you know, speed to market. What has your experience been on that front, and to what extent has the ability of flexible office solutions to move fast, to what extent has that influenced your planning cycles and the way that you think about workplace delivery? Are you moving faster or able to think more last minute, or are you still finding yourself operating on the longer lead time cycles of a traditional leasing world?
Yeah, well, I think if you look at from a time perspective, I think I'm spending as much time on a hybrid deal as I would do on a fixed deal almost. What I find is that the majority of what we have been dealing with so far is still not ready. Say to be ready, but is not ready to deliver in speed. I can touch on an example in a country where we went in, and they went in for the first time, which kind of comes with a challenge of setting up the entity, getting all that kind of work done, which kind of sets you back a long time, right? It's not going to help. And then in the execution phase, kind of when they have to really start building it, it also results in two issues, because they don't have a local network. Right, so they need to build the local network with us. So if you look back at that specific one, I think I spent as much or maybe even more time on a hybrid deal as I would on a fixed deal.
And now, are you doing that with an expectation that by investing that energy, you're going to help the market learn how to do it faster, or are just as much work for a hybrid deal?
Well, yeah, especially with all the providers, or the majority of providers kind of promise you from the get-go is that it's going to be super fast, you know, before you know, it's like flip the switch on, you have the live people working. Yeah, in the service office, I would definitely agree that's still the case. If you look at the hybrid kind of solutions, it's so far we had a great run with you guys, but a couple of others kind of definitely let us down in that respect.
And we're very much in first generation of this, so that's not like there's a second, third, fourth generation of this sort of product in any market. So literally, we're going into markets where the sort of all the traditional steps need to be taken: site selection, construction, design, right? All those normal things. And frankly, nobody's been able to improve that cycle, that sort of end-to-end cycle, so that we literally just walk in a week and flip the lights on and we're ready to go. And that's probably because of this is all being very first generation. Yeah. As this matures and as Daaf invests more of his time, energy, and helping these markets mature, when it's second, third generation, or when some of these large providers have a true footprint in many of these markets, that would probably change. And an example might be if we went into, into the Manhattan market where WeWork has a lot of footage. They're probably second, third generation now in that market, and so you probably really could get in there fast. But that's not the case when you sort of step out of those markets where that has been matured. We even don't see that in the Silicon Valley, where I'm based, as well. That maturity is not there, and so and if you take that outside of the U.S., obviously that it's going to be first generation in many of the markets that we're in.
And I think we also need to be careful of because of the economic boom, right? There's so many companies offering their services today. You need to really drill down, and we get that. We have that support for somebody that and a company that kind of helps us with that. But you have to really dig deep into even their financial positions just to understand if they go belly up, what happens with us, right? It's some risk analysis. And we found actually in the past with one of those deals that they were having other plans with our deposits, right? Just to give one of these examples where we're like, oh, no way, right? This is just simply unacceptable. Yeah. We're not going to let our money be used to fund your other operations, right? That's shocking, actually.
One of my prior guests, John Arenas from Serendipity Labs, made the comment that some of the models that are in practice today are a suicide mission, where you've got small entities that are taking on naked lease obligations and arbitraging without the financial backstop for it. So there is a musical chairs moment or risk, perhaps, that when the music stops, there may be some folks that don't have the standing or the strength to continue to operate as they have been.
Mark, but I would say that's true of some of the big operators too. I don't think that's limited to the small operators. I think that risk exists across this portfolio, quite honestly. I think
they're all in depth, right?
Yeah, and I think a market downturn would certainly test that. But I think that I think there's a risk up and down the scale there.
I would agree. That fact, or that potential risk, is one of the factors that has me quite intrigued and I think hopeful for the prospects of institutional building owners themselves stepping into this realm. And Robert, you touched on that earlier. Have you yet experimented with turnkey, we'll call it little or hybrid offerings from any of the larger owners who've begun to experiment?
We've had, I'd say, dozens of conversations towards that, but we have not gotten there yet with any institutional owner.
We can't bring up Denmark.
Yeah, you can. I think that's a good case. But I don't. I mean, I think there. If I'd say this, I'd say the institutional ownership, this is theirs to own. If they could figure this out, they could really be dominant in this space. They've instead outsourced it to, that middle operator, many middle operators. I think that they could, and frankly, I think that's why you're now starting to see WeWork, for example, talk about owning a lot of their product, because there's certainly more control. They can manage the risk differently. I think the institutional owners, some are starting to wake up and say, oh, there's value here, I can do this. But it's a very, very slow change and a very slow evolution for that community.
I strongly agree with that forecast, Robert. I think it is theirs to own, or at least control a good portion of, should they choose to. Mm-hmm. Their challenge is that it does introduce new operational disciplines for them. Mm-hmm.
And that's definitely what we found in one of the locations. We had a market where it was extremely challenging to either to find something of a hybrid space. Landlord says, come here, we're going to take care of you. This is going to be all arranged. And from the first conversation to delivery was full service to zero service,
Yes.
because they end up being the landlord and don't know how to be serviced or to provide services.
Yeah.
So they think they're in, they're the new world, and then you kind of drill down, and then in the end of the day, you have nothing, right? We now service it ourselves pretty much.
Yeah, what this isn't is property management, right? So if you're an institutional owner that's great at property management, well, this is not that. This is a whole different offering.
It's experience.
It's an experience offering. And so I'm sure there's great stories out there of where it's working. We have not been able to find it yet. But as you've said, I think that forecast that the three of us sort of hold, I think is the one, should they choose to engage it and grab it.
Well, let me put you on the record. Service providers like to sort of tell a story of the future that supports their mission, right? So if you're providing co-working space, of course, you want to have a forecast that the appetite is going to be enormous. So amongst that echo chamber, there's a growing consensus that flexible office will grow to be as much as 20 or even 30% of enterprise workplace portfolio. Do you see this as a real prospect for ServiceNow? Is that number something you'd like to see happen in terms of the distribution of your own workplace portfolio? And if so, how soon?
The answer is yes. I actually think it could be a higher percentage for us if the product offerings were there. And again, I keep using the analogy of cloud computing. I think it's very, very similar in nature. As a company, we don't want to go build our own data centers and our own infrastructure. We want to use that of other people. And I think that you could make that same argument for the physical environments that our people sit in. We would be fine if that percentage was higher. We'd want to have some core assets around the portfolio. But I think that there's a lot of, certainly the edge cases, that's an easy one. And I think that some of the bigger centers, couple hundred people, 500 people up to maybe, absolutely we could see in that environment, which would sort of take us maybe 30, 40, 50% of our portfolio could be in that product.
And what percentage of your portfolio would you estimate today is flexible in nature?
Flexible in not in fixed leases. So on
flexible 60%.
Well, number of addresses 60%. Square footage though, it's probably 5-6%. It's pretty low on the size side, but high on the numbers of location side.
And if there's an aspiration to see that grow to the industry forecasts of 20 or 30% or more, as you said, what are the binding constraints that you're facing today as you look to see it grow to that larger number?
Yeah, just the product doesn't exist in the market in the way that we need it to. And that's so, there are no global players, for example, that are delivering this product. And I know there's some that are getting closer to that, but there really isn't one partner or two partners or three partners that we can go to do this around the world. And so that in itself is a limiting factor, because then we've got to go, and as Daaf said, it's taken him as much time, if not more, to scour these markets to find this product offering, because it just doesn't exist yet. So we're in early innings, first generation in many of the markets. And so it's not there. If it was there and easier, we would absolutely be having a different discussion today.
Yeah. Well, and even if you kind of going forward, right? Like for example, in the US, where we still build a lot of traditional office space, right, with cubicles, and which is going to take up a lot of space. And if we start to really, and I don't know that a lot of them already do, but utilization is also going to be a really big thing for not only for us, but for the rest of the world. That will definitely make you look at your portfolio a totally different way.
Daaf, what are the performance metrics that you apply to that portion of your portfolio? 60% of your locations, 5% of your asset. Are they the same metrics that you would apply to your leased footprint? Or do
no, we did. Yeah. So for ServiceNows, we definitely use a different ratio. So if you look at a development or a support site, we definitely apply a 1-to-1 ratio. In I would say most cases, in the case where we open up sales offices, you look at the 2 to 3 ratio. and can go up depending on how geographically challenging that specific supermarket is.
But one of the challenges, Mark, we have around that is we don't have a way to consistently measure utilization in those things that are outside of our fixed portfolio, because they're all different operators. Some have technology, some don't. Some do utilization measurement or not. So frankly, we don't actually, while we may have a metric around it, we don't have a way today
No.
to actually understand what the utilization is, and that's a challenge in some of those, with some of the operators we're working with today in some of those products, where in our traditional space we can get to that utilization pretty easy.
Is that a part of Utopian specification then, that for your ideal hybrid solution, it provides you the ability to understand utilization?
It's starting to come into our discussions that we're having, that we'd be able to understand it, and then we would be able to build the supply and demand around that utilization a little bit, versus build 50 seats and just hope every 50 people come. Instead, have it more of an on-demand, supply and demand, some flexibility in that. And that's kind of where we want it all to be perfect, and that's going to be very difficult for somebody to deliver. Is we want that flexibility. We want to have the utilization be what it needs to be based on the way people are going to use the space that day, that week, that month. And sure, we'd love it if we would create these great environments and everybody wanted to be there every day, and they're full and bustling, but those aren't the realities of some of these spaces for us today. And I don't know that would change, if that's going to change much, just because of the nature of the work that a lot of our knowledge workers do, right? Some are on the road, some are working with teams in different places, et cetera. So I don't know if we'll always have people that are in the office every day. And we'd like that. We'd like to understand that from a utilization perspective, and then we'd like the space supply to respond to that.
And then you come into all the other issues as it relates to privacy and legislation, right? We tried to do something in one of our service office sites in Germany, and there's like a whole list of stuff that you need to kind of hand over to them in order for them to release it, because they have the sensors, but you need to do an awful lot of work to get the data. And we actually just ran a big sensor study in one of our sites, and the numbers came in this afternoon. So I haven't had a chance to talk to Robert yet, but it's shocking. It's beyond shocking.
Yeah.
Shifting gears slightly, change is afoot. There are thousands of operators now in the flexible office economy, and more coming all the time. We have whole new categories entering the fray, with institutional building owners starting to play. Robert, you've spent 2 stints of your career in the service provider side with Cushman Wakefield and CBRE. And of course, I'm sure that community is a big part of how you run your workplace operations today. As it relates to flexible office, hybrid office, what is your outlook with regards to the future for the traditional brokerage community? Historically, it's been something they didn't put much attention to, and perhaps for obvious reasons. Their economic interests were more closely aligned with signing large leases. Do you expect to see that community be a part of the supply chain for you, or the transaction chain? Do you want them to be? What's your candid outlook on that front?
Yeah, so I think there's a huge risk to that community of disintermediation, and I think that community is starting to wake up to that. And if you look at some of the bigger operators that are out in the some of the bigger operators like a WeWork, for example, I'll use them. They would like nothing more than that brokerage community to disappear, and them to have a direct to consumer purchase. They don't say it that way, but I think that's the reality. So that disintermediation, I think, is a huge risk to the traditional brokerage market. And oddly enough, that's something that Daaf and I have talked a lot about with some of our partners that we work with. And I think you said it right. Generally speaking, the big guys didn't want to play in what they would view as the small space. But now this is becoming such a predominant part of the solution set for many companies. I think they're having to figure it out. So I do think there's a risk there. I do think that they could be disintermediated very easily. I think they've got to figure out what their service offerings look like around that. And I think it's very different than traditional go find me space, work the best deal in the world possible for me. It's a very different model. And if I think of, we work with a very small company today that's their specialty, and their service offering around that looks nothing like traditional brokerage. It looks everything like, how do I help you find the best service environment and the best employee experience environment? It's a very different model. And I think that the brokerage community has to figure that out, at least on the tenant side of the house. And I'm sure there's very similar challenges on the agency side, et cetera, as well, when you kind of look at this whole topic.
Yeah, indeed. It's now a reality amongst even some traditional institutional building owners that you can go to their website and click on a button and tour a space and book it online. So that's a very different world than a broker-controlled, lease-dictated history that we've come from.
Absolutely, and I think you get a little credit for that, my friend. I think that that is not a new thing. I think that sort of disintermediation had started several years ago with different product offerings, but it is definitely, I think, a real risk today for that community of folks. If I as a consumer of space can go secure that space without a broker in the middle, whether that be through whoever it is, whatever provider it is, that changes that environment. And I know, having been on both sides, very rarely would any of my brokers or my partners walk me down the path of serviced office being part of it. It just was never in the discussion, right? For all sorts of reasons. The economics weren't there, or they didn't understand it, quite honestly. They didn't know how to even bring that into the solution set.
Well, I guess I'd like to close with a question to the both of you, which is, I'll start with, first off, a congratulations for the enterprise that the two of you are helping scale. It's an exciting company and one I admire. Just look into the crystal ball for us. I'm curious for both of your perspectives on the nature of the real estate organization that will be at ServiceNow 5 years from now, after you've made more strides toward that utopia. Is it going to look in any way different than the real estate organization that 5 years ago managed a predominantly traditional lease portfolio? Does it become more outsourced? Are there new roles emerging? And again, to the extent you're willing to share, I'm curious what you think your own career paths look like and the teams that you're building.
Yeah, I'll start and then see if Daaf and I agree, and I imagine we would on this one. But even the persona today of the person that we're hiring in our workplace teams is different. And if we can find somebody that comes, for example, from a hospitality background, we'll grab that person, because it is less about the traditional nuts and bolts of facilities and real estate as it was 10 years ago, 5 years ago even, and much more about employee experience. And so that is now kind of where we're putting most of our energies, is how do we create great experiences in the workplace. And the way I talk about it often with my team is, in the old days, the building was the customer. Your job was to keep the building running and the building happy, and by default, anybody that was in the building was happy. Well, now our industry and the way we think about it at ServiceNow is completely different. We think about the customer first, the person first, and then we think about everything else around it. So I think that shift has started for us as a company. So our personas in our team, the real estate workplace team, will continue towards more of an employee experience, more of a hospitality bent, and probably less around technical expertise, to be quite honest. You'll still need finance experts, you'll still need real estate experts, you'll still need that, but I think the group will be more oriented towards hospitality and service offerings than we are towards some of the more traditional pieces that you might see.
Yeah, I can only say amen on that one. No, I totally agree with that one.
Terrific. Well, I think this has been a rich conversation. I'd like to thank the both of you, and I think valuable insights and hopefully a strong signal, or a series of signals, out to the supplier community on what indeed the customer actually wants. So thank you both for your candor, and I wish the both of you continued success.
Thank you, Mark. Really appreciate it.
Thank you, Mark. Appreciate it.